Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, June 24th, 2013. And this is brought to you by Triton Wave Consulting, which represent early warning market timing indicators in all time frames in all markets. Okay, so let's look and see what the S&Ps. I think this hash mark right up here is when we first talked last Sunday, and we've had, let me see, 1, 2, 3, 4, 5. So Sunday we closed right about here. Let me get a pointer out. Okay, Sunday, a week ago Friday we closed here. So this was Monday, Tuesday, Wednesday, Thursday, and Friday. All right. So we went up a little bit. We took a little bit of heat, and then we got the 40 points that I told you was going to happen when you wake up one morning. It's going to be down 40 points. All right. So it hit. It blew through. It blew through the 55 period moving average. Okay, so this line. All right, this line that goes back to the middle of April, being right across there. All right, that 40-point move that we had on the downside that I told you was a distinct possibility, that happened on Thursday right here, and it started the day before about 15 points higher, so it was actually about a 55-point move. All right, that went through the 55 exponential moving average. Okay, so this is what we have here. We have a cross of not only is the T1 down, T2 down since back in the first week of June. This is the first day. You can't see it right here, but this is the first day right here on the opening of 5 o'clock session on Sunday that T2 is below zero, and that is the first time that has been complete. You can see the numbers here. 343 came down right here. Okay, that's the first time that that's happened. Let's move this back. Since they were both above zero right here on January 9th, when the S&Ps were selling for 1462. So let's just draw a line there. 1462 was the top of this move right here, and let me see here. Maybe it's not 1460. Yeah, that's about right. Okay, 1462, and that's when this came up. Okay, so this where these two lines intersect. This is January 7th, 8th, and this was the resistance, and then it came down, it hit the 233, and then it came back up to resistance, and then moved through it, came back down, which is now support, and then it just managed to just a series of takeoffs. All right, so what are we looking for from here? I am looking for, right now we're down 75 ticks. Let me see here. We're down 500. We're up 200 right now. We're down 75. So it's kind of all over the place. But number one, this is one of the most important things right here. T2 down below zero. All right. So immediately I see this heading to, you know, it may try to come up here, whoops, a little bit to the, wait, let me do this again, where you can see it. It may try to come back up here to the 1605, but I don't think it's going to happen. I think we're going to zigzag back and forth right across the 89 moving average. And then I think we're going to come down to the 144 exponential moving average, which is 1547, which puts us, let me see if I can eyeball this. That puts us right about here, which was the support from the last move up here. When it went through, came down to support, I think there's no reason why it shouldn't hit the 1547. All right, let's look at this on a slightly different chart here. Let's look at it on the 21. 21, let's look at the day only 21, and what do we get here? Okay, on the 21, look at the breaks that we got on Thursday. Okay, this is a break that happened back in the end of June right here that ended up in that. That was the break above. That break above was a little bit late to the party, but you did catch a little piece of it. And it actually stayed above zero this whole time, and this moved above zero also. I'm sorry, this moved positively, even though it zigzagged down, up, down, up. The net change was up about 25 to 30 points on the S&P. All right, so now we have this coming down right here. And that happened right in here on 6/19, which was Wednesday, which was right about at whatever price this was. Let me see, I can't see it without that. 1632. And if you're following these waves, or if you're following these waves, then you got practically this entire move. Okay, one of the things that I wanted to show you was that also on the 21, the 8 and the 20, the 8 on the 21-minute chart. Let's blow this up. Okay, the 8 and the 21 is coming slightly. It started to come above zero, but it never made it. So it's gone flat to down. All right. So, and all these waves, all of these waves are below zero. Bing, bing. Let me see. That's below zero. That's below zero. That's below zero. So, and it's in concert with the daily. That's the anchor. So let's look at a 1597 to see what we get out of that. And we're looking at, I'm not sure where the days divide up on this. Let me see here. Let me make some days out of this so you can see where the days were. All right, that's one day. Boom. Whoops. 1, 2, 1, 2, 3, 4. One more day here. Okay, so those are our days, and we can now put this in a 1597 time frame, and you can see where the days are. So all of this was on Friday, and you can see how they go back. All right, so let's see what happens during the daytime for the last 2 days, especially on Thursday when it went down, what the plays were on the S&P. And it's really choppy in here. You don't want to use this chop on when it's volatile like this, because you're not going to be like playing 2 or 3 points and missing something like this. So basically, you're going for the long one, which is down here, and capturing that. These are the points right here. You're using T4 to do this. And now T4 is not quite below zero, but it may be by the end of the evening or somewhere around midnight when the Asian markets start getting in full bloom. So if we go back here, you've got this move back down here above zero. Actually, you really didn't get, this was like sideways to down. But then you got this below zero, and you captured this one above zero, you capture that, this above zero, you capture that, and this and this above 0 right here, you captured this. Now, you can get out basically whenever you want. You can take 3 points, 5 points, 8 points. When it hits these targets, like these exponential moving averages, like the 144 here, 144 exponential moving average. I'm sorry, this is, whoops, wait a minute. That is not the 144. This is 1575 up to 1587. So that's a 12-point move. But when it starts hitting these exponential moving averages, so this is a 377. So this is like this. This is the 610 exponential moving average on the 1597 tick chart of the ES. But you can see all the nice moves in there. All right, we're going to take a look at Apple here. Okay, so Apple made its turn. The 8 and the 21 crossed right here, and they crossed the 55 period moving average, which is in red, all on the same day. So it really doesn't matter what these waves are doing. If they're going down, which they were here, that's good enough, because you can look this up on the 21, which I'll show you in a minute, and that is a definite sell signal confirmed by the moving down of the waves. Okay, so we played this right in here, and we were lucky enough to make a really nice play in there. All right, let's move this to the 21, and let's see how that worked out. All right, when they crossed 4 days ago, this is what we had on the 21. This is a move below 0, move below 0, 430, 430, 430, 433, and it's still below 0. All these waves are below 0. And as I showed you on the daily, it's down, it's also down below 0. I mean, it's not quite down below 0, but it's descending. The T1 is descending down, and all the exponential moving averages are crossing to the downside. So that's where Apple is. Let's look at a 1597 on Apple to show you even a little bit more clearly. Let's do a little bit shorter. Let's do a 610. Nah, that's not a good one either. I have to keep looking around, because sometimes there are better representations on the longer waves. These are some like really short plays from in here yesterday morning, from, you know, definitely counter trend trades, but like 431 to 437. But the major moves are, you look at the bigger waves, like right here. So which is T4. Right here, T4, then it confirms with T5. I mean T3, T4, and then it confirms with T5 almost simultaneously. And then we have a little kick at the end of the day. So you don't want to stay in there Friday expiration especially, but it's a good time, you know, like to go into the next series. You want to probably wait for this to bounce up a little bit. I'm not sure how much this is going to bounce. I wouldn't be surprised if it goes up to 421. Even if it's counter trend to the stock market, it has to take a breather. On the 21, let me see what the 21 looks like on the breather. 21, so if it comes back, so 418 is possible, 5 points from here. And 418 to 421 is possible. And if we look on the daily again, that brings us up to 418, 421. That'll be probably right at the point where the 8-period moving average descends a little bit. You don't want to go right up to here. At it's right now the 8 EMA is sitting at 424 or 425.40, 425.43. But by the time 2 more days go by, or tomorrow opening, it's going to be about 421. So we'll be lucky if you get 421 on a short, which actually matches what's going on that is, okay, check this out. That's 421, that's 421, that's 421, and 421 would match up where this is. So that would be a good time to short. All right. That's all I have. It's not shorter than normal video. The economic news just keeps on going the way it is. The argument was the Bernanke hearings was the root cause of everything going down because they were going to pull funds. Everybody's known about it. Nobody thought that it was actually going to happen. But it's time for basically everyone to. It's time for everybody to realize that the Fed cannot prop up the stock market, and we have to look realistically at what's happening in the economy, in the European economy, in the Chinese economy isn't growing as fast as everybody thought, which is one of the reasons why copper came down, which is one of the reasons why all the commodities, including gold, came down. So that is all I have for tonight. I just wanted to tell you that in addition to I have private clients that I do gold trading with. I'm also expanding that service to just like a monthly service that includes making calls on gold, the GC, whether they're long or shorts, and high-profile stocks and options and ETFs like the SPY and GLD. And when you become a client, I will shoot you an email whenever I see changes, like during the day or sometimes during the evening in gold. And you can take advantage of the same things that I've been showing you on videos of when T1, T2 crosses and there's a 5 or 6 or 7 point move in one of the stocks, then you can take advantage of it using options. So please give me a call at, not a call, but email me at tritonwaveguy@gmail.com if you are interested. Enjoy the rest of your weekend. Have fun out there and be safe, and good luck trading.